Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi, here with my co-host, the Thai Director of Content, Lawrence Lewitton. Good morning, Lawrence.
Good morning. Happy Monday.
Happy Monday. How was your weekend?
A lot of kids' parties. It's, you know what? I'm glad to be talking to adults again.
Well, we are glad to have you. Let's do some adult things and talk about the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 29,462 after taking a dip on a DeFi exploit that we'll be talking about in just a second. Yesterday, it has recovered and is up about 0.5% this morning. Let's see if Ether followed suit. The CoinDesk Ether price ETX index is at 1,871, taking that same dip yesterday on the Curve Finance news, down about 0.2%. And let's take a look at DeFi assets. The DFX CoinDesk's DeFi index, which includes the Curve token, is down just over 1% at 130, while the Curve token is down just over 10%. Lawrence, let's take a look at that top story. Another DeFi exploit. More than $100 million worth of crypto could be at risk due to a bug impacting Curve, a stablecoin exchange at the center of Ethereum's DeFi ecosystem. Like I just mentioned, it's down over 10% in the last 24 hours. What are you seeing happen here, Lawrence?
So, yeah, there were some pools that were affected here that used the Viper. And we had something like $50 million or so that were absconded. I don't know the exact verb you'd want to use here, but they went away. Somebody drained them. And they actually did a kind of a white hacker, a white hat attack, reattack, if you will, of some of it. So they got about $5 million back, which was it's something, but nonetheless, it still kind of brings to question some of the fault problems you could have in the software itself. And if hackers can attack and drain your pools, well, remember, code is law. I guess we'll see how long that lasts here, but it wasn't a good day for Curve. Let's just say that.
Definitely not a good day for Curve. Every time I see one of these exploits, I hate to be so cliche, but it just reminds me that we're still so early. There's still so much to figure out, so much to fix before we go mainstream.
Yeah, remember the whole theory here is transactions are immutable, if you will, or at least for now they are. Although we've had situations with ETH in the past where that wasn't the case, but that required a lot of. I don't want to get the ETH community all upset about that, but nonetheless, there was when you have it as immutable and you can't like reverse transactions necessarily, it's tough for people to get their money back. Not impossible, but it's very tough.
Definitely presents a new set of challenges. All right, let's turn now to the state of crypto.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, joining us now for more analysis is Ava Labs President John Wu. Welcome to the show, John.
Hi, Jen. Hi, Lawrence. How are you?
Hey, how are you?
Good morning. All right. Now, you heard the top of our show first before we dive into what we're going to talk to you about today. We wanted to get your reaction on yet another DeFi exploit with Curve.
Yeah, it's a very unfortunate. It's a setback for the space, and it's never a dull moment. Even yesterday on Sunday, when I first heard of it, I started reading about it. And you both have done a great job of talking about exactly what happened, and the story is still unfolding. So we will ultimately see. But I think there's a couple of things we can take away from this. Like with all systems that require code, there are mistakes. Sometimes they're human, sometimes it's in the programming itself. And this is not the first time. So it really highlights the need for better security audits, perhaps oversight, and hopefully one day maybe even artificial intelligence can be used to more efficiently review the contracts and make it more secure.
I was just going to ask. I mean, does this bring up the whole? Now we have this whole AI boom happening, and all this excitement around it. That this is a prime opportunity before these things are brought into the wild. That we can have something that would, like almost an audit system that would grade the code and say it's been checked by AI for exploits.
Well, more than just grade. Yes, that's a great idea, Lawrence. More than just grade, but AI can actually do things a lot faster and iterate and continue to, test the code and can, as generative AI does, it can learn from itself. So ultimately, I think it could be used as a tool to bring more security and fewer exploits to the space, which is super important because, ultimately what Curve is used for is for predictable and stable lending and borrowing. This is why Curve exists. And it's so needed in DeFi so assets can move around. This is also, I think, part of the reason why, some of the initiatives that Ava Labs is doing with real world assets, tokenizing traditional assets like private equity or foreign exchange or commodities or real estate, they are far more stable in terms of asset pricing. So they could also be used to solve this problem in terms of making it more predictable and stable for lending and borrowing in the ecosystem.
So, John, you did the transition for us into kind of what you guys are doing here with tokenizing. And I have to ask here because we, of course, have an SEC that has made it clear that they're going to scrutinize crypto, that for the most part, anything that's not Bitcoin is a security. Jury's still out on ETH as far as I'm concerned. I don't know how they'll eventually take it. And to be honest, I'm not sure about Bitcoin some days. But how will this, as you tokenize real world assets, how do you see that being traded when it seems that the SEC views things, is going to say, look, these are securities, obviously, and especially if you have tokens that are backed by securities, therefore it needs to follow regulation. How do you do it in a decentralized manner when you have a regulator that says we want to be at the center, essentially overseeing all these trading actions?
So that's a great question, and there's a lot in that. Obviously, it was a long question.
Sorry.
No, it's great. And we have to uncover.
You're not the first person to tell me I ask long questions.
So, tokenization of real world assets, the tokenization part is really a wrapper for the underlying asset. Whatever the asset is, whether it is a security, a commodity, a painting, what the tokenization does is it's a wrapper for the right of ownership, and it's in a blockchain. Think about it. There was a time when ownership was represented via paper, and then it had to be digital. And now this is just a different type of wrapper for representing the ownership. So that's a distinct difference. And from the previous court case, at least, the district result from Ripple, they came out and said there's a difference between the underlying asset and the way it's transacted. So if you're going to wrap that asset in a tokenized version and put it on a blockchain, you still have to use the proper licenses and regulations and use the right methods that particular asset type would need in order to transfer, just like it does in other forms when it's wrapped in just 0 and 1s or by paper to represent the underlying value of the asset.
John, you brought up Ripple there. How are you, Ava's a US-based company, how are you looking at the partial win that Ripple received over the SEC? How's the rest of your company looking at that as you continue to build your business in the US?
There's been so much said by so many people. I won't repeat any of that, but I think the big takeaways are it brings more clarity, which is great, but it's not conclusive and there's a long road. And I think what it did do was provide a catalyst for Congress. And it's not coincidental that just in the last week or two, you've seen so many bills being pushed or moved and voted on to help regulate, bring clarity in a comprehensive way to the space. So from that perspective, initializing or catalyzing Congress to get involved is a good thing.
So getting back a little bit to asset tokenization here, how do you see it ultimately, though, for the consumer, at least? I mean, like, it's one thing when it's institutions buying and selling these tokenized assets. But how do you see consumers purchasing and selling their tokenized assets? Do you see them on, going on Coinbase, for instance, and doing it that way? Or do you see it private DeFi versions of it, if you will? Or would it require creation of new institutions to make it happen?
So let's go through the benefits of tokenization, and then we can answer that question after we go back to first principles. Basically, the tokenization, if you broadly speak, brings value in terms of creating more liquidity, providing better access for individuals, and obviously it provides a lot of efficiency. And that efficiency in the code or in the automation of the workflow or the way things are saved saves a lot of money, a lot of cost. The efficiency benefit is being seen today. You've got JP Morgan doing JP Morgan Guardian. You have Canton, which is the project with Goldman Sachs and a whole bunch of others. You also have Ava Labs, help KKR tokenize a sliver of their healthcare fund so they can provide more access to accredited or qualified investors. So the efficiency side, I think, is becoming clear to the institutions. The access side is just starting to happen. It's going to first happen to accredited and qualified. But ultimately, the thing that they need to get the most benefit of tokenization is liquidity. And that liquidity will happen with current players such as Securitize that have the broker-dealer licenses, and have the right ATS, and have the necessary, call it compliance, in order to transact that. Now, the issue is from a commercial perspective, and awareness and adoption of that is still lagging. So this is why the foundation of Avalanche has basically initialized with this Vista program to basically help create lubrication, and so that the places with the proper licenses can have some liquidity for the new people that access these hard to find tokenized assets.
John, you're doing all the transitions for us this morning. You're just such a great guest to have on a Monday morning. Tell us more about your new initiative that you just mentioned, Avalanche Vista.
So Avalanche Vista is from the foundation, and it's a $50 million effort for basically once institutions, whether that be banks or asset managers, could be, for example, the KKR situation, has agreed to tokenize, just like a traditional bank in the regular TradFi world, takes the initiative to have green shoes or other things to make sure that there is, call it demand for it. That's really what it's there for. It's not there for necessarily to hold them. If they can, just provide that initial liquidity and allow places like, again, with licenses like Securitize to affect a secondary transaction, that is the purpose of Vista. And I think to support these project launches with liquidity, but also Ava Labs will support it with help integrating into a sub-network, or helping them grow and learn the benefits of tokenization, such as what we did with Spruce and T-Row, Wellington, and Wisdom Tree, where they effectively have an institutional DeFi ecosystem to tokenize whatever assets they desire.
John, before we go, I got to ask you about the metaverse. I know you're a big supporter of the metaverse and Web3 gaming. Given Meta's recent report that they lost billions of dollars on their metaverse division, we've seen Yuga Labs not really publicly launch their other side metaverse yet. What's your outlook on that? Are you still bullish? How's your partnership with Alibaba going?
Well, thank you for asking that. We're very excited about partnership with Alibaba. We have to remember that the metaverse is defined differently by different people, different companies, and different regions of the world. A lot of metaverse is associated with real estate, virtual real estate. Others associated with a background for gaming. One thing is for sure, if you look at gaming as a proxy, there are about 3 billion gamers in the world. 1.5 of those are in Asia. And Alibaba is trying to create a metaverse where there's a virtual real estate component, but also makes it fun and there's a gaming aspect to it. And I think we're very bullish on that aspect of it. How it's properly defined going forward, I think it's going to evolve. And ultimately, it's a digital world. My kids play in effectively a metaverse called Roblox all the time. So I think we're going to move towards that. So depending on how you define metaverse, we are going to move to a world. We're just going to be more online than we were before, especially the younger generation.
I got to ask you a quick follow-up here. Is anyone using it? I know you're helping to enable businesses get into the metaverse. Are they actually doing this, or given the market, given what they're seeing happen with more mainstream companies like Meta, are they kind of just staying on the back burner, waiting to see what happens?
It is beginning. I can't say it is, so abundant that you turn or you go somewhere online and you can just find places to go. But people are experimenting, understanding the value and how companies can create incremental revenue for themselves and how users can find great entertainment, if you will. I think it's very, very much in the early stages, but things are happening.
All right, John, thanks very much for joining the show this morning.
Thank you.
Yeah.
That was Ava Labs President John Wu. We're going to take a short break. Coming up, we'll take a look at what's going on in the crypto markets as Bitcoin flirts with $29,500.
Bitcoin is hovering around 29,400. It is the honey badger of crypto because central banks raise rates. It doesn't care. Curve finance has an exploit. It doesn't care. What does crypto care about? What does Bitcoin care about? Well, let's find out. Joining us now to discuss the crypto markets is eToro U.S. investment analyst Callie Cox. Welcome, Callie. Happy Monday.
Happy Monday. Thanks for having me. And you're right. Bitcoin is kind of acting like a honey badger.
It really is. But I do want to get to this whole thing about what happened here with Curve, because $50 million drained in this latest exploit. Walk us through the difference here. It's obvious to us the difference between CeFi, centralized finance, and DeFi, decentralized finance. But for the average investor who's looking to get into this, get into trading, or want to know more about, should they be involved in DeFi? Explain to them the difference here and what kind of risks in each.
Yeah, sure. So, first of all, centralized finance versus decentralized finance is a choice. It's ultimately up to the investor on which side you want to take. And you can try out both avenues, to be very, very clear. But the thing you have to consider in decentralized finance, and of course we all know decentralized finance is basically, financial protocols built off of the blockchain, not controlled by one party. The transactions are more focused between, in between one party two parties really without a facilitator. But the thing you need to consider is the fact that one centralized party does create a little more trust in the ecosystem and does provide you with, certain barriers of protection and safety. But at the same time, you have to be able to trust that centralized party. So, when we think about centralized finance, that's traditional finance. A lot of centralized parties are the Fed, different governmental agencies. And while the idea of decentralization is, alive and well here, and there are, reasons out there not to trust centralized parties, security hacks like what we're seeing or what we saw with Curve just recently is one reason to, maybe be a little wary or maybe take into some considerations when it comes to investing or putting your money into decentralized protocols.
So trustless, which was basically the underpinning of crypto, seems to be a problem in crypto. That's what you're saying.
I don't think it's a problem. It's just something that's come up as the space has grown quite a bit. It's something the space needs to address, but it's not. I don't think it's insurmountable.
So, speaking of insurmountable, let's look at the price of Bitcoin here, because I tend not to look at these things, calendar patterns, because everything is different. Like our children, each one is a special, unique snowflake, and that's what I'm going to say about units of time when it comes to Bitcoin. Nonetheless, people look at calendars and they say, August and September, those 2 months are when Bitcoin goes through this lull period for whatever reason. I don't know what it is. Phases of the moon, who knows? It's not an issue as far as I'm concerned. But what does this mean?
Yeah. So as you mentioned, we're kind of getting into the dog days of summer here. And something you should consider if you are a crypto investor or a stocks investor is that people are going off to the beach. They're not looking at their portfolios or trading their portfolios. So trading volumes are probably going to be lower as we get into, August and the beginning of September. And when that happens, when trading volumes are lower, markets move a lot quicker on more inconsequential headlines. So you're right. Bitcoin seasonality, or, the seasonal patterns we see show that Bitcoin prices have been a little bit weaker in August and September. It's not necessarily a bad thing. And you can definitely see trading volumes help a price if a good headline comes across the tape. But it's something to be aware of. It's a reason to stick to your targets more and consider hedging your portfolio, especially if you're taking that vacation to the beach.
Callie, I think you don't know enough degens, because they'll trade no matter what. They don't care. At the beach, they don't. It's just nonstop trading. I don't know what you're talking about.
Hey, if that's how you want to roll, I definitely support it. I lay off my portfolio when I go to the beach, but I know you're right. So many people don't.
Money never sleeps. Okay, Callie, you mentioned in your notes that the majority of U.S. retail don't think we're in a bull market. You're saying a lot of people are expecting another big dip. Are you expecting that? What do you think?
Yeah, I find this surprising. And, this stat that I put in there comes from our Q3 Retail Investor Beat survey. We surveyed 10,000 global investors, basically asked them what they're expecting, what they're investing in, what they're worried about. And we asked them, do you think the S&P 500 and markets in general are in a bull market? And, when we're talking about a bull market, we mean just a period of, just considerably or consistently rising prices. And 86% of investors said they don't think so, which is a shock to me because, of course, if you look at the S&P, we're up, 30% plus since the October lows. And obviously, Bitcoin is up quite a bit as well since its lows back at the end of 2022. So I think that shows that there's a lot of doubt in this rally. There's a lot of skepticism, and that could also mean a lot of people on the sidelines. I do want to be clear, though. I think Bitcoin is seen as a more quality, safe haven asset within the crypto space, and it's benefited from the fact that there has been a lot of doubt about this rally and a lot of skepticism about the future. So it's interesting. We've actually seen speculative coins do better over the past few weeks compared to Bitcoin. And that could be because the attitude is, lifting a little bit.
So speaking of which, Mike Novogratz, a guy who woke up one day and said, it'd be a good idea. I'm going to get a giant Luna tattoo on my shoulder. What could possibly go wrong? So he said Larry Fink was the best thing to happen at Bitcoin this year. I mean, should I start worrying?
Well, I'll throw out what I say about bubbles and, frothiness all the time. I don't think you can say that we're in a bubble or a frothy period until you're past it. People say that a lot in hindsight. Right now, I think the skepticism is a good sign. A fact that, again, people are sitting on the sidelines, that, people feel a little bit nervous when they're considering those speculative trades. And the fact that we're seeing speculation doesn't automatically mean, prices have gone too far and we're preparing for a pullback. I mean, we're seeing economic data tick up with the rallies we've seen in both stocks and Bitcoin as well, which I think is an encouraging sign. And I think, people are just recalibrating their portfolios slowly to realize that, we could be past this economic worry and these recession worries. I'm not saying for good. Nobody knows what the future holds, but, I think that investors have been a little too pessimistic and now they're slowly moving their way to the other side.
I don't know if I'm a pessimist, but I definitely want to chart the tattoos on Mike Novogratz's body and just see if there's a way to short everything that's on there.
I think you could do that for your next segment, Lawrence. Yeah. I would love that.
Yeah, great idea.
Yeah, just go take a bunch of weird photos of him, see, what logos he's got, and just go the other way.
All right, Callie, on that note, we are going to leave it there. Thanks so much for joining the show this morning. It was a pleasure seeing you again.
Yeah, thanks for having me.
That was eToro U.S. investment analyst Callie Cox. We're going to take a quick break, and when we come back, we'll ask the question, is the era of decentralized social dapps here? We'll take a closer look at the impact of social dapps in the Web3 ecosystem right after this. Good morning and welcome back to First Mover. Social media giant Twitter recently rebranded to X, and DappRadar notes that the rise of Web3 tech could signal momentum towards a more decentralized approach to online interactions. Joining us now is the head of research for DappRadar, Pedro Herrera. Welcome to the show, Pedro.
Hello, happy to be here. Thanks for the invite.
Yeah, we're happy to have you. Now, this new report focuses on the impact of social dapps in Web3. The report says that social dapps have seen significant growth and currently captures 13% of the market. Unpack this for us, because I know a lot of people who have tried Web3 social dapps, but I don't know any who have stayed. They're still on the Web2 social platforms because that's where the audience is. So talk to us about what you found.
Yeah, I mean, this is a category that we have been monitoring for quite some time. Actually, the chart shows since Q4 of last year, we saw significant growth in the on-chain activity coming for social dapps. And what we label as social dapps is those decentralized applications that their main value proposition is creating a social funnel for users to navigate and share maybe insights, share their favorite trends, and so on. And probably the most significant example is Lens Protocol, which was also founded by Avi, the founder of Ava. So we start to find some similarities between certain protocols, but always driving towards the same goal, which is opening the social media to people in a decentralized and transparent fashion. So when we try to compare, please go.
We just showed a chart here that was in percentages, but realistically, I like physical numbers, like people, downloads, etc. What are we looking at here, and how does it compare to Web 2?
I mean, to be honest, we're at a very, very early stage. What we are looking is around 200,000 daily wallets connecting to social dapps. I mean, if we compare that even just to X, that's even 1% of the entire Twitter or X user base. So it's still a very nascent stage, but very promising when we look at the potential capabilities that that social dapps will enable. One that I am very intrigued about is the transparency, right? We all are aware of the Cambridge Analytica fiasco that happened with Facebook a few years ago. To remove that data barrier with social dapps. You also drive towards a more transparent and less biased media, which is always appreciative. And also one of the biggest advantages is that you can really empower creators and reward them instantaneously with a very funneled social dApp and giving also transparency and visibility to different people and creators.
What are the hurdles to joining a social dApp if you're downloading and actually interacting with it? I mean, the masses are familiar with having an email account, signing up to X or whatever, the Y or Z, whatever the letter of the alphabet they're throwing at it, and then they just know how to do it. It's intuitive at this point, but a social dApp, or what are the hurdles there that you would then have to get? My mom, who might know how to get on a Facebook, might not know how to get on to a social dApp. So what kind of hurdles are there, and what does that mean for the growth of social dApps? I mean, does it have an upper limit here?
I think it applies to the same principle that it applies to most of the Web3 projects out there, that they are always trying to reduce the friction that exists between the technology and the end user. Because let's be honest, like setting up a wallet, storing securely your seed phrase, blah, 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 it creates layers of friction that it becomes a bit difficult for users to adopt the technology. So I think in the first place, these social dApps will drive towards a smoother user experience. So that's the first approach.
I mean, basically, are we the only people using social dApps? Are they mostly crypto bros?
At this stage, I couldn't label as crypto bros necessarily, but I mean people with Web3 knowledge, definitely, that's for sure. But for example, we take a look at other examples like Hooked, which is a Binance-based social dApp. They are creating a very inclusive environment of learn to earn. So exactly that 322 monthly users, and they are learning and educating the masses in terms of Web3, what's a wallet, what's a DeFi protocol, and so on. So these type of social interactions will, in the end, come hand to hand. And then we have the other type of social dapps, more related towards decentralized social media, like Lens protocol. And that is also a very nice example of what you can do in decentralized Web3. And I would definitely suggest all the listeners to at least take a look.
You know, billions of people use Facebook and Meta's other products, Instagram, WhatsApp. How long before you think billions of people are using these decentralized social apps?
Yeah, I mean, definitely it's going to take a good amount of years as also the technology progresses. It will give developers better tools to create smoother interfaces. I saw, to be honest, X move as a very bold move, especially with the backend plan of becoming sort of a high conglomerate that encompasses a wide array of industries, becoming an end-to-end economic industry that also pays directly the creators with crypto, very probable. So that is definitely going to remain a challenge, but I think that we will see the 10 million user social dApp in the next 2 to 3 years. Probably 2026, we'll be talking about Lens or any other protocol reaching 10 million daily users.
All right, Pedro, we are going to have to leave it there. Thanks so much for joining the show this morning.
Thank you. Have a pleasure.
That was the head of research for DappRadar, Pedro Herrera.
Well, a little bit of sad news for First Mover because we might lose one viewer. That's right. The DOJ filed a formal submission wanting to revoke FTX founder Sam Bankman-Fried's bond and move him to prison ahead of his October trial on allegations he repeatedly tried to influence with witness testimony. Sorry to see you go, Sam. Anyway, joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of the most important advancement of civilization since cave paintings. That's CoinDesk State of Crypto newsletter. Good morning, Nick.
Good morning.
So happy Monday. And of course, the prosecutors in the DOJ, from the DOJ are alleging what kind of allegations are they making here as they submit to the judge regarding that viewer of ours, Sam Bankman-Fried? Not all of our viewers are accused of this kind of level of stuff, to be sure.
So far,
yeah. We'll see.
Yeah, no. So basically, the DOJ filed a written submission echoing largely their verbal claim or their verbal request from Wednesday's hearing, where they said that Sam Bankman-Fried had, now on at least 2 different occasions tried to influence witness testimony, and therefore they're trying to revoke his bond and remand him into custody ahead of his trial in October. The defense has until tomorrow to provide a response, and we'll see what they say. But so far in court, they've said that they don't believe that Bankman-Fried has gone so far as to try and intimidate witnesses. They're claiming that he's merely trying to defend his reputation, and they're also saying that having him locked up would make it a lot more difficult to organize his defense. Although prosecutors in Friday's filing didn't seem particularly impressed by that argument.
All right, and this comes as Sam Bankman-Fried's lawyers have asked the court to seal the private diary of former Alameda Research CEO Caroline Ellison. What's the data telling us? How might this turn out?
Honestly, that is a good question. So, obviously, Inner City Press's Matthew Russell Lee has already filed to unseal that diary, saying in, basically in the filing that this has already been shared with at least one news outlet, so it doesn't make sense to seal it from other news outlets. We'll see how the judge feels about that argument, but it seems to me, in my uneducated opinion, that there's a certain logic to that. The bigger part, to me at least, is, in court, the defense said that the New York Times had only seen 1 or 2 pages of this diary, of these documents. And in Friday's filing, the prosecutor said that they had actually been sent 8 pages, And we're told that the New York Times only saw portions of it, but they don't know which portions, and they haven't even received the original version of this document. So they're asking for that as well.
All right. Hypothetically, this is kind of confusing because it's like, all right, you have a guy, like, let's say you have somebody who submits a diary to a newspaper. Does it make sense they then turn around and go, let's keep it sealed? I'm kind of confused by that whole thing.
That's literally, Inner City Press's argument, which, again, it's, it's hard to say, okay, well, down. Yeah, on the one hand, you're sharing it with, one of the world's most prominent newspapers. On the other hand, you're asking for it to be sealed because it's not ready for public dissemination.
Yeah, go figure that one out.
Yeah, there's something there.
All right. Well, timeline real quick. What's going on next?
Yeah, so tomorrow the defense will have a chance to respond to Friday's filing, and then the DOJ will have one more chance to respond before Thursday. From that point forward, we'll see what the judge chooses. My personal guess is we're going to see another hearing happen. He'll schedule a hearing probably next week to discuss these submissions. He could also, I think he could just rule on the written filings, but, this is Judge Lewis Kaplan of the U.S. District Court for the Southern District of New York. He's been pretty meticulous, I would say, about this whole thing so far. So, my personal guess is, again, that he will schedule a hearing and we'll hear more arguments about this.
All right, Nick, we're going to leave it there. Thanks very much for joining us this morning. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover on a Monday morning. I'm Jen Sanasi. Lawrence, thank you for joining me this morning.
Thank you for letting me join you and
maybe
not throwing me
we can have like a high five. No?
Oh, wait, was it?
Yeah, there we go.
Wait, other one, yeah. Okay, yeah,
no,
okay.
Yeah, and
just don't release my diaries. It's just going to be full of gambling losses.
I will never do that to you,
That's
Lawrence. You have my word.
Yeah, thank you.
All right,
honestly, it's just like a bunch of things to my bookie.
First Mover returns tomorrow at 9 a.m. Eastern Time. In the meantime, you can catch the hash today at noon. You're watching CoinDesk TV.